Hello, YouTube. Today we got a hawkish pause. So, what exactly did Jerome Powell and the Fed have to say today? Because he's pretty much saying, hold on there. We're going to pause right now. We're going to see what happens and we're going to decide where we go from here. What's very interesting is that our high of the day is over 439 and we also got a gap fill. So, we're going to come back and have a look at these in a few moments. The first thing we want to do is just make sure we understand exactly what Jerome Powell and the FOMC had to say today. First thing is that we actually notched 1 point higher in extreme greed, up to 81. I don't know if the market heard what Jerome Powell said, but I think based on something else we're going to look at in a moment, or the dot plot expectations for the next meeting, Jerome Powell, the risks to inflation are to the upside, talking about a couple of years out for rate cuts. So what does this come down to? It comes down to whether or not the market believes the numbers they got here. So this is the updated SEP, or summary of economic projections. And at the end of the video, we will leave you with the weekend review where we talked about all of these numbers. And just right now, I'm going to ask you for a huge favor, please and thank you. If you could, consider smashing that thumbs up and subscribing to the channel. I would greatly appreciate that. So we talked about these numbers. I'm just going to highlight the ones that are important for me. So GDP got revised up, unemployment got revised down, PCE got revised up, and core PCE got revised up. And the Fed funds rate is now pricing in 2 more 25 basis point hikes. Why does that matter? Well, because right now, when we look out to July, we have a 65% chance of a hike. But then when we look out to September, what do we have? A 60% chance of a hike to the same rate. Right now, the market is not pricing in a higher rate than what the Fed has told us. They're thinking that's it. There's one more, and that is it. There is no chance, at least as of right now, that they're going to make it to that number they're quoting here on the SEP, or 5.6%. So what does this mean? It means the market's fighting the Fed. Who's going to be right? Well, today the market won because it's up. And we're going to focus on 2 key levels as we're getting started here, because it was very interesting to watch the price action. Today we did a private stream for our members. And you can go to the link here if you want to join us for a 14-day free trial. Whoa, what's going on there with the magnet? So you can join me at thealgo.com to get a 14-day free trial and to trade with Justin from YouTube. There we go. So let's snap some lines on the chart here and see exactly what happened. We're going to snap the gap fill, and then we're going to snap yesterday's low of the day. Let's look on a 15-minute chart. Why? Let's actually go over to QQQ first to see what I want, to show you what I wanted to see today. Excuse me. So we can note that QQQ actually managed to put in a daily higher low, but when we snap here to the gap fill, which would have been at 360.49, let's actually make sure we got the right number there. It's 0.59. We closed at 0.49. There we go. So yesterday, what did we do? Well, we opened up, we crash land on the gap fill, and then we just march higher, forming what? Higher lows. Let's get rid of that stupid magnet. We form those higher lows. We get a punch higher, and then we continue. Oops, sorry. That's actually here. So this was yesterday's price action. We open up, crash land on the gap fill, higher lows, march higher, march higher, march higher. So on a daily chart, we actually have a higher low. But we filled the gap yesterday. That's something S&P has not done. So now let's go back to SPY and see what happened here. Let's just get rid of that line. And if you're enjoying this, please make sure to let me know by smashing that thumbs up, please, and thank you. Trying something a little bit different today to show you what you might have missed if you were in our group. So looking here, we note that we have that 433.88, close enough. And then yesterday's low is 434.63. So here we go. We got the FOMC headline number. And in true fashion, we got a knee-jerk reaction, which means we went lower. The true move was not lower. We went higher. And what happened? The exact same thing. Low, higher, low, there's the pump. And then what happened? Another pump into the close. So that means the bulls defended the zone, and we had dip buyers come in, and it defended the chart. So we do still have lower gaps, including 432 and the ones we talked about yesterday. But at least as of right now, with the doji on the chart and hawkish commentary, what I want to remind you of is that today is only Wednesday. Tomorrow we have the ECB. I believe we got the BOJ on Thursday or Friday, which is going to be tomorrow. And the move we see on the FOMC is not always going to be the same move we get tomorrow. I think we should have been down, but because we got that knee-jerk reaction on the 15-minute chart, which means down then up, this might have just been option related, might have just been in regards to them wanting to close it out here it's a marginal green close. So what I would want to see for tomorrow is for us to be back above our high that we established on Tuesday at 437.33, which basically means I want to see us back at 438 and making progress towards 440. Something else I want to point out here is that on the S&P E-mini futures, we already, we don't have a gap just because it trades continuously, but what do we have? We have a 438.175 low, 438.350, which is a higher low. But what we're not doing is getting back above yesterday's high at 4423.25. We're really close. It's within a whisker, but it's not over. So just pay attention to that. Why? Well, as we open up another candle, again, what could happen is we could, again, keyword being could, form a head and shoulders if we're unable to get back above 44.23. That's what I'll be watching for. All right, so looking to the heat map for today, what did well? Well, NVIDIA, as we talked about yesterday, it made a $1 trillion market cap close. Today, it's closing at 430, basically, up by 5%, and 1.06 trillion. We got Oracle up on earnings. UNH was down. They guided, and that took down healthcare today. So why is that important? Well, we talked about NVIDIA and Apple. Let's go over here to NVIDIA. What do we note? Oh, my goodness. Intraday record high, record close. Another push higher. So even though we have a gap, as we talked about a lot, another gap here, we got tons of gaps on this chart. It just continues to squeeze. So if we keep leaving those holes and we keep forming higher highs and higher lows, we have to assume we're going to keep going higher. I would expect that this 420-ish area should now be support. I'm actually really surprised to close at the high here. If we look over to Apple, the other one we talked about, what do we have? We have a record close. We don't have a record intraday high, which just means that we didn't breach the 185 area. But what I mean by a close is just if we go to a line chart, look, we got a fresh high. Line chart only cares about the closing price. So if we only look at the closing price, Apple made another record, right? Bullish engulfing daily candle over the high. It's looking pretty good. I would also note that Apple is quite close to a $3 trillion market cap here. Currently 2.89. So I did the math right back of the napkin math, and I believe 191 is where we're going to have that $3 trillion valuation for Apple. Big, big, big number. All right, so what else do we want to look at today? Well, we want to look and see where was the softness, because if we understand that NVIDIA is strong, Apple is strong, is everything else strong? Microsoft looks good, but it's not quite at that 52-week high zone yet. We have to get through these previous highs here from 2022. So I do want to see other stocks follow the lead of Apple and NVIDIA. Why? Because leaders lead and followers follow. So if this is truly going to be a move where we see broader participation, I want to see some other big cap tech names join that new all-time high record close club. Microsoft's closed. Google is flatlining out here, already showing signs of a head and shoulders, really just going sideways. Amazon still grinding. Looks a little bit exhaustive, a little bit of a red day. Let's jump down to Meta. Same thing, push up, flag. It's flagging out here. There's a key area on the weekly chart as I note that here. And Tesla actually snapped a, I think this was a record nonstop green expansion here. Oh my goodness. How many green candles? Well, it's 13 back-to-back green days, and it closed down by about $2 today. There you go. So when we go to candles, again, hollow versus full just tells us whether or not we closed higher than we opened, or if we actually have a green close. What I want to look at here are going to be a couple of the ETFs which actually closed soft today. Like what? Like the Russell. So the Russell is actually just completing a pattern here. It's a W, hit resistance, backed off, bearish engulfing candle, closing below the low. This one's what I thought would have happened to the broader market. Because when I showed you that headline about interest rates are going to be higher for a couple of years, there's one of two things. It's either that the market's like, yeah, you're going to keep them higher for longer. Heard that before. Haven't seen you do it. Why? Well, because I'll show you here the Fed funds. Let me just pull up the graph really fast, because I think you'll find this interesting. The market's basically voting and saying, we don't believe you, and they don't believe them for a reason. Why? The market, the Fed is ever since, actually almost never, they've never been able to sustainably hold interest rates at a high period. Here it's from July in 2000 to December. That's about 6 months. We look forward here to 2006. It's from August to June. That's about a year. We'll look here to 2019. It's from December until July. That's about 6 months. So the market's saying, hey, we know what you're saying, but your track record's not all that great. And you're going to have to prove to us that you are going to actually do what you say you're going to. So the small caps are doing what I thought would happen here. And then we look to the other things that had softness. We know the Dow is a little bit soft. It's not terrible. It is a hammer, but we're closing below yesterday's low. The other softness that I noticed today is coming in from energy. And that's just looking like it's not quite sure what it wants to do, right? Lower, dead cat bounce, higher low, reject off the 50. It looks a lot like the Dow, where excluding tech, like a lot of softness is out there today. Regional banks taking it on the chin, right? A 2.5% move lower, which means this is what should happen, right? More hikes means more pain for regional banks. And then we also note that healthcare one we looked at before with UNH, where we note that it's actually below both its averages, has a golden cross, but is actually below both. So dead cat bounce up, reject off the 50, reject off the 50. There is a small inverse head and shoulders inside of here, but we're below the averages. So with that said, I'm going to leave you with the weekend review, which we left you over here, which is going to leave you with my deeper thoughts in terms of what I thought would happen into this SEP. And if not, thank you so much for watching. I will see you tomorrow.